Good morning, ladies and gentlemen. How's everybody doing today? So, thank you as always for tuning in. All right, talk about Tesla and why adding shares is good news for your company. So, Richard, really, the good news there, I think, so it's like an intermix. I think what people are seeing as the good on Tesla, and we'll discuss it too, and I'll show you the chart is Elon Musk is buying back shares of his own company. So when a CEO is starting to buy more shares in his company, it's not supposed to, but it gives people a sense that that's a good thing when the CEO is buying shares of his own company, right? So he believes that his company is going to perform well. So that's an insider, right? Buying a lot of shares. Why is he buying up shares, right? Maybe because it's at a lower price or he just wants to. Whatever the reason is, when a CEO is starting to buy up shares, it's seen as a good thing for the most part. All right, so let's get into it. Tesla being the first. So Tesla ended up just skyrocketing here pre-market. So, a big portion of what you're seeing take place is people buying up shares, but also a big short squeeze because a lot of people shorted Tesla yesterday. Were probably short overnight, short from this day, that day, this day, short for a while now. And this news comes out, and basically anybody who had gotten short over the past like 1, 2, 3, 4 days is basically getting squeezed out right now on this move up, or maybe not, but there's a big short squeeze taking place from the news that did come in. So if you look, it goes Tesla's offering 650 million in common stock and 1.3 billion in convertible senior notes, right? So here's the other thing: is whenever you see a company whenever you see a company do an offering, most people think it's a bad thing. And the reason that people see offerings as a bad thing a lot of times is because they're used to seeing the effects of an offering when done to a penny stock. Most oftentimes when a direct offering or a secondary offering or shelf offering, whatever, anytime there's another offering of common stock, onto the market from a company and they're penny stock, they usually tank. But when you see an offering in a large cap stock, they don't see as big of an effect or drop as you would see in a penny stock. And the reason being is when you do an offering, the company's looking to raise more capital, more money to do whatever with. Okay. Tesla, in theory, isn't a company that's wholeheartedly failing. You actually see their cars on the roads and their gig factory. So there's actually a big company there. But when you're looking at a penny stock that's already been downtrending, it's only worth a couple bucks, we already know the company's failing. So when they do a direct offering, they're trying to raise more money. Well, yeah, they're basically are going to fail anyways, most likely. So that's the thing, is Tesla's a really big company. And then when you also mix in there that the CEO, Elon Musk, is buying, I think he said 10 million worth or something. Let's see how much he's buying. Where does it go? CEO Elon Musk to buy 10 million of common stock in his offering. Okay, so with that being said, that's kind of that play there on it. Okay. Yeah. So let's see. Tesla stock Elon Musk to buy. Okay. So may buy, to buy, won't buy, will buy. Whether it's may or is or guaranteed, the effects are still there. So whether or not he does or does not, that's kind of what's going on there. Elon Musk reality show. So we're gonna move forward, but anyways, did want to say this. So we got this markup here at about 248 on Tesla. We're starting to see some selling coming in just before that level, and this is the really big key level that was put in place. This big falling day right there. So that's a very big down drop, which there's a lot of sellers located in this area, and you're starting to see the sellers come in right at that area. So I want to watch Tesla today. The likelihood that I buy it very close out of the gates doesn't seem likely. It just seems it's up really big. in my mind, I would more or less rather see it pull back off these high levels for a dip on the day than a bounce. If it gets over 248 and 250, we could see an additional short squeeze. I don't know how strong the sentiment is on the stock. I guess we'll find out once the market opens. So far, it's been strong. Question is, will it hold up? If it does and prices get up over that 247, 250 area, we could see like a secondary form of another short squeeze on the day. But at this moment, it's gone from 230 to 247 this morning, which in theory means it's already traded well above its average true range on the day. I mean, it's not really counting it because it's not the day, but either way, I mean, from 230 to 247, that's almost 17 points on the day. Average true range of Tesla yesterday, I think, was 9 or 10. So it's already 7 points above its average true range. I mean, I'd be more set on a pullback than anything with Tesla. So if you're watching it, keep it on watch for a pullback initially. Well, we'll go over to ABIO. As somebody back a couple weeks ago, maybe it was last week, mentioned in chat that ABIO would be a big runner, and then I kind of solidified that answer. And yeah, we were kind of saying keep it on watch because, yeah, it could be a big runner. So she's moving right now. She's spiking. Probably not going to be crazy about trading this. I mean, if it wouldn't have squeezed up to $15, then yeah, but other than that, now it's kind of like meh, maybe, not really. So yeah, if you want to play the game, so you also have to understand what's going on, okay? ABIO is, well, yeah, it's getting short squeezed right now. Yeah, before yesterday, ABIO had a short float of 43 or 45%. Today it only has a short float of 4% because everybody got squeezed out yesterday. Now what we're seeing is fear of missing out buying and still some short squeezing from intraday shorters shorting the stock because they think it's too high up and it has to come down now. So pre-market, you're seeing a form of a short squeeze and some more momentum buying, especially now that it broke over yesterday's high point. Anybody who swung short from here to here just got squeezed out again. So it's going to be fun. I'm still going to watch it, but the only way I'll trade it is if it goes through a form of consolidation. I won't be chasing up any spikes, probably won't buy any of the small little pullbacks. It would have to be consolidation like this, which we probably won't get today, or it'd have to be on a dramatic dip, but we'll see. Price is up to, let's see what's up to 15. So we do have these previous high tops all coming in around 17, 16, 15, 18, 19. So we are getting into that seller location. So definitely do take note on that and be cautious of it. At this point, the risk is greater than the reward on ABIO. Do I ever go short? Yeah, short on a daily basis, usually. Yeah, pretty much short almost every day. JUMI, so let me talk about EB real fast. So again, do take note that ABIO is definitely overextended. Risk is probably very much higher than reward. Again, they probably have a direct offering right around the corner, and then the stock's going to get crushed. You guys remember MBRX, then you remember MBOT, you remember all those stocks that went through direct offerings. This is direct offerings most likely right around the corner for ABIO. JMIA. So JMIA had a pretty decent day yesterday, coming off a big sell-off day prior day. The only thing I don't like about JMIA is the fact that it's up towards its previous high. I mean, it's not really in the greatest of setups. I mean, I would probably still, to me, it's like a 50-50. You have this big slump day, it gets dip bought, right? It's performing some wicks, and then I'm going to look at EB in a sec. But to me, it's like a 50-50 because if it pops up here, you might get a little squeeze up and over towards 51 if it wants to really move. But if it fails, then you're just going to roll over and drop out today, because this is starting to form, somewhat of a pennant. And if it is forming a pennant, then its next move is more or less going to be down. Maybe up before down, but it has to perform either a flat top, a pennant. So I think JMIA is worth watching for sure. It has arguably a cup and handle here, but that cup and handle was from here to there, and then it dropped again. So for me, I'd be a little hesitant on this stock, right? Down here was a good long. Now up here, you're seeing the sellers coming in again. Okay. EB. EB is another stock that had earnings report today, and they went from 25, 24 down to 16. So you're going to be watching this initially for a short play, and the reason being is if you look at the chart, it's below all of its support. There is no support. There's nothing. So this kind of has no floor. So we're going to actually watch this short bias initially, and then if that fails, then I'll be watching it long bias. But again, EB, another good one to keep an eye on. There is no support. Only support system was here back. Only dip area was down at 19, which it just blew through with a breeze. So again, really nothing to keep it from falling unless magical buyers just show up and start buying it up. Okay. And those are the three stocks. So watching Tesla, because it's created good range, could probably find a good few scalp trades intraday on that. ABIO is on watch just because it's ABIO. And then EB is on watch for their earnings report. No support. Earnings report with no support below that 19 level. So going to follow that short bias initially. Mike, trading for 5+ years now. No, I mean, yeah, I've shorted stocks in the same day and bought stocks in the same day. So I've shorted moves and then dip bought. Yeah, I've done that before, but it's not like it has nothing to do with not having a bias on a stock. It just has to do with seeing opportunity and really just taking it, right? If I see a short play, I'll short. If I see a long play, I'll long. Yeah, everybody wants a parabolic run. Doesn't necessarily mean they're going to get it. See, BPTH was a little bit different. They had far less outstanding shares. So the setup, and they actually had really strong news. ABIO doesn't really have any strong news, and the outstanding shares is still pretty high. So again, it's still a different beast there. Not as strong of a beast. Yep, I do have a margin account. Everybody has a margin account. If you're not on a cash account, then you're on a margin account. PRPO, a bunch of people, I've been seeing the stock going around recently. I haven't really watched it much. Yeah, it's a choppy setup. I myself, I'm not crazy about it. Because, I mean, what are the moves? So, like, for me, like, the moves intraday, the volume isn't even really that high. If you look at a 1-minute chart, I mean, the moves are decent, not bad. It's just not a stock I'd find myself trading, probably. And for one, I don't know much about it. I could be wrong a couple ways here and there, but, oh, yeah, they just did a reverse split. Yeah, no, this is garbage. Yeah, PRPO is garbage. I wouldn't mess with that. Wouldn't invest in it. Probably going to see it drop out a little bit today or tomorrow. No, you don't need a runner. You just need to be focused on, a nice small moves. HEB. I'll take a look. Let's see. Nah. Nope. Yeah, probably wouldn't mess with HEB. Hold on. We'll look at the market here. So market ended up taking a nice drop yesterday, late day. So personally, I would probably be a little bit short bias on the market or a little bit bearish for right now. Just after yesterday's move, after the Fed meeting, right? Until this puts in a higher low. See, it's kind of trending down pre-market. So until the market puts in a higher low from yesterday's after hours low, I would still be bearish on the market today. In theory, there is a tiny divergence taking place. Not much, but a small one right here. Very small divergence in the price action of the market. So how much is that going to play an effect? You could look back here and there was there's a tiny divergence, bearish divergence. Whether it's going to hold up or not is another story. But back a little bit ago, there was a far bigger divergence. You can see this one was much bigger. Right, then we had the big drastic sell-off. Right now we have a tiny little divergence taking place. So it's possible there might be some downward move based on some just pure momentum here, kind of dying out as they're pressing those all-time highs. You had the Fed meeting yesterday. Fed was pretty dovish, just same old bullshit, back and forth. We don't see any problems, nothing. But they did say global growth is slowing down. So I'm going to be more short bias on the market for right now, considering we're at all-time highs right in these levels. Right? So again, really not too much there. Also, there's some I've been playing with here. 1 second. Right now, it's not like super extended in terms of this pitchfork. You can kind of see this pitchfork here. It kind of travels the middle line, hits the top line, likes to sell off, bottom line bounce. So we are arguably getting a little high in terms of this sort of charting technique. But, you know, again, I've been the same on the market as I have been. I don't trust the market. I don't like the market where it's at. Again, it's just not. Yeah, I mean, there's not much more I could say. Yesterday was the first bearish day we've had in a while, so I'm going to look to see if we have some sentiment keep pushing this market down. I will say this, if you're following the market closely, keep an eye on this level here from like an intraday standpoint, 290. 290 is most likely going to be a bounce area for at least an area where we're going to try and bounce on the market. If it fails that's where we're going to get a little bit more of a sell-off below 290. Yeah, and also, guys, just to note, the move yesterday down in the market came after the fear of market crash meeting, which, by the way, they didn't really say anything that to me was too new. I mean, the Federal Reserve said they're going to keep interest rates. I mean, right now the inflation's at 1.9%. They did say they see inflation reaching 2%. Said interest rates, they don't think they really have to do much with. They said there really is no need for any change in their monetary policies right now. So, I mean, other than global growth weakening, we already knew that months ago. They said that trade talks and the Brexit deal seem to kind of, settled. Not like it's been settled, but there's not as much of a scare for that, which is true because I really give two shits less about the China trade deal and the whole Brexit thing at this point. It's like, just keep it out of the news until you make a deal and then we'll go forward with it. But other than that, they just sound like a bunch of idiots talking back and forth because it's just annoying. Oh, Brexit deal undecided. Oh, trade talks are going well. No, trade talks never are going well because you guys cannot strike a deal. So again, the trade talks thing, they are correct that it has less of a scare to the market because I could care less what they say about trade talks. It basically means nothing to me at this point. So that's what that drop was related to yesterday was the FOMC meeting. But to me, there really wasn't too much that was said that we didn't already know. So But then again, you have to remember the Federal Reserve can't just come out and be like, hey guys, stock market's going to crash, because then it's definitely going to crash. And they can't just come out and say, hey guys, this is the strongest market we've ever seen in our entire life. You should be buying it up like crazy, because then they would cause a panic buy, right? So again, they really can't say anything they really can't tell you the whole truth, right? If they see anything, they can't tell you exactly the whole truth, because then they cause a scare or they cause a panic buy. And so when it comes to the Federal Reserve and Fed Powell, they have to really be careful on what they say, because their words affect the market dramatically, because all ears are watching those meetings, just waiting for some signal, something to be said, so they can't really do that. I always call it fear of market crash. That's the way I see the meetings. You're right, but he is actually right what he said in there. That's kind of but then again, that's kind of our joke in our chat room, so disregard that. Sorry. But that's basically what we call, because that's really what we're looking to waiting and hearing for, is a fear of market crash. Opinion on IRBT today. IRBT has relatively low volume, so don't expect anything dramatically fast unless there's a short squeeze, which I highly would doubt. I mean, there's really something like this. I mean, it's so dried up on volume that really it's very hard to judge exactly what's going to happen. But right now it's just consolidating, so you got some support areas down here. So I mean, your support's all the way down there, so it might drop out a bit, more buyers come in, but I wouldn't say there's too much to look at there with IRBT. Yeah, it bounced. Now it's kind of consolidating sideways. You're really just hoping we get a curl. That's it. It needs to get over 104.60 and cause that additional kind of push up. Am I trading options on the SPY? If I choose to, I will. Don't necessarily mean I will, but I might, maybe. Never know for sure. For me, whenever I trade options, it's only when the volatility is high. I really kind of... Which is funny, because if the volatility is higher in the market, then you're going to pay a higher premium for purchasing options. So in theory, it's almost better to be an option writer when the volatility is higher, because you can charge a higher premium. But then again, it goes both ways. When there's more volatility in the market, then your options can spike and make you more money faster, and vice versa, lose you more money faster. But again, for me, trading options is always best to do when the market's extremely volatile, in which right now it's definitely a little more volatile than it has been. If you check the fear factor or the VIX, you're going to see that, what are we probably pressing 14 now? Yeah. So there is a little bit of a curl starting here with the VIX. So right now, that's what people are keeping their eyes on. They're going, oh, the VIX is starting to curl. VIX is starting to curl. Might have a little down drop in the market. So, yeah, the VIX is starting to get a little bit more volatile. But for me personally, it's really like once you start getting into 1820, I mean, that's when shit's really volatile, and that's when the market's really fun. So yeah, just track your volatility. When volatility is higher, your options are going to be priced higher, but you're also going to have the likelihood of faster fluctuating moves in the market to either win or lose money too. Qualcomm. So Qualcomm's still holding up, still doing its thing. I'm actually kind of impressed by Qualcomm. I might have underestimated this thing a little bit on its big screaming move. So it was interesting to see its earnings play drop out and then kind of bounce right back up. Okay, but I don't have time. But long story short, it's very interesting to see it go down and come all the way back up. It's recovered a lot of its gain. But anyways, I do have to actually get off here, get back to our private meeting. So with that being said, guys, thank you all for tuning in, and I'll see you guys tomorrow morning for another watch list.